Welcome back to my YouTube channel. Today I'm going to talk about how to construct a dividend yield portfolio. As you know, dividend is very important and many people they need a regular cash flow. Then the question comes, should we invest in stock? There are stocks which have got good potential and they have given regular dividend. So depending on your need of cash flow, you can construct your portfolio in such a way that you have got appreciation plus dividend. So before we get going, let us understand from where the return in the stock investment comes. So stock returns. So when you talk about stock returns, there are two sources. One is from appreciation and other is from dividend. So the stocks which are giving a lot of growth, they rarely give dividend. When you talk about mid cap stocks like odd multi-bagger, they don't give dividend. Whereas even the stocks like Hindustan and Deliver, the stocks like Asian Paints, they give very little dividend. But there, the maximum things come from appreciation. But there are stocks which gives dividend as well, and there are appreciation as well. So when we talk about constructing a dividend yield portfolio, we need to look at these two. So before I proceed, I like to reiterate here, investing in stock is risky and always consult your advisor or do your own research before investing. Purpose of this video is purely educational. Also understanding some terminology of finances, knowing the macroeconomics and also learning the stock market is very important. I do have a set of courses which is available at drbishram.graphy.com. drbishram.graphy.com. Please do visit this site and look at the courses. There is one free course. If you complete that quickly, I will give you further discount on the set of courses which are meant for stock market. You may like to go through my courses or you can look at the web and then look at other courses as well. One thing I would like to tell you is my courses will be much cheaper because the basic purpose is not to earn money, but to introduce the basic concept to the investor. Then question comes, why do I charge that? If you give something free, people don't value it. That's the reason I have kept a little pricing for this courses. So anyway, let's get going. So primarily I was talking from that appreciations and dividend. Let's say a company, you buy a company at 100 rupees share and there is no dividend. So after 5 years, let's say the price becomes 150, then and dividend is zero. So his return here would be 150 by 100. 3 years I have taken power 1 3. So this is will be your return. Now let's take another company which gives you scenario 2, or we'll take another company scenario 2 where again we buy at 100, but this company gives 5% dividend. This per year 5 is there. So and then after 3 years the price over here becomes 115. So return in this case will be 115 by 100 to the power 1 by 3 plus 5% which you are getting as a dividend. So the trick is, or the main thing is, to select those stocks which is decent and they keep on giving consistent dividend. The question comes, should you look at the stocks which are giving highest dividend? Not necessarily, because there are stocks which gives very high dividend. There could be other dynamics and appreciation. Instead of appreciation, there is depreciation of price. So understanding the stock becomes very important. So today, what I'm going to tell you is, I'll pick up about 6-7 stocks, construct a portfolio, tell you step by step how to choose those stocks and construct your own portfolio and do some analysis and then build that for earning a regular dividend. So, very first thing I'd like to tell you here is, I'll take you to screener.in. It's a, as you know, Screener is a software where primarily you can do any screening. So here, I'll do some screening here. So create a new screen. I can say that dividend yield is greater than, let's say, greater than 2.5%. You can choose any number. And just to qualify that I'm doing a good job, return on equity is greater than 15%, and there has to be some profit growth. So EPS growth 3 years. should also be more than 10%. Why I have taken that? Because if you do this, you will get a decent set of decent company, and then you can do further analysis, further research, and find what they are. So by doing this, you get a set of companies here. Like you get about many companies. So let's say 21st Century Management. Now it's a small company, so I ignore this. Coal India, very large one. Look at the PEG ratio, 0.48. So very good. Dividend is 5% plus. And then ROE is 52%. Monopoly. Sales have grown at 16% last 3 years average. EPS 46%. So decent stock. Similarly, Swaraj Indian you can look at. This is also decent. I told you Noble could be a decent stock. ITC could be a decent stock. BPCL could be a decent stock. So friends, what I'm saying is, in this list, you will look at many companies which give a decent dividend and also grow. Having done that, then go to the drawing board to construct your portfolio. So for doing that, going to the drawing board for constructing your portfolio, I will take you through a Excel sheet where I have listed five, seven actually, seven items, seven stocks to construct a good dividend yield. Power Grid IT. This is Power Grid Infrastructure Trust, which gives a dividend of 12%, but there is no appreciation. So appreciation will be whatever they earn, they distribute as a dividend because it's an infrastructure trust. Gives a so 1 lakh if you invest, you get 12,000 here. Coal India 5.12%, 1 lakh 5120. Need loan. It's a real estate company now owned by Singapore government, and they have got a great property in Goregaon in Mumbai, and they give a 6.1% dividend, decent growth also. And then if you do 1 lakh, and similarly you have IOCL, HCL, PFC, and REC. These twins are very good. They do have a growth potential and they have a decent dividend. So you add it up, total investment becomes, adding all these numbers, 7 lakhs. Total annual dividend becomes about 39,060, which gives a dividend yield of 5.58%. So now this is almost like a FD return, although FD return is a little higher now because stock has gone up, but it's very similar to FD return. And the plus point is these companies are positive companies. If you choose good companies, your capital also will appreciate. Certainly, this is designed in such a way that if I invest in this, capital appreciation should be around 10%. So here I have done another thing. If your annual requirement for dividend is let's say 4.8 lakhs, this means 40,000 per month, you need a investment of about 86 lakhs. So by doing this, you can find out how much money you need to do that. So you may not have that money in the beginning, but the point is, if you want to create it, you can go on creating slowly. Like in the beginning, your portfolio is small, so you start doing it. Have some growth stock, have some multi-baggers, have some dividend stock, and then go on building systematically. And that will help you a lot in terms of creating it. Now, once you do this, then very important aspect becomes how we look at here. So here, what I'll do is I'll take you to the work list which I created the dividend yield work list where I have taken this some stock which I showed you an example, and I want to show you how to look at these stocks. Look at the basic parameters here in terms of return on equity. The PEG ratio is still 0.51. If it is less than 1, very good. Less than 1.5 also should be okay, but less than 1 is really preferred. Then profit for 5 years has gone up by 20%. For 3 years, 20%, very decent one. Of late, the prices of this stock, if you see 10 years performance, has risen a lot, but still at today's numbers, today price, this looks decent. The second stock was CL Technology. See, it's a consistent growing up, giving 3.5. Third was Coal India. Now here, this was the best time. You saw a lot of volume. Again, it has appreciated, but still at the current price, it's a decent one. Mid-launch, very stable. And I think it is price is very close to 200 days moving average. So good time to will look at. Indian while is little, you have to be little careful. Don't buy at current price, but you can have an antenna, and when the price gets to your line, you can buy. So friends, what I've said is, if you construct your portfolio with these seven stocks and do a good selection based on your requirement, you can construct a portfolio which grows at let's say 10% plus, plus also gives you dividend of about 6%, which is very decent. So by doing this, idea of this video was to ensure that you can construct portfolio in different way. Person A may have only growth requirement. He has a lot of money coming from maybe salary or something, then he goes only for growth. Then person B could be a mixed nature, like maybe something for growth and something for dividend, then he can construct accordingly. So by doing all these, you can bring home a decent gain and decent cash as well. But I think proper study is very, very important. And if you do that, your investing career will be very, very rewarding. So I hope you like the video. If you like the video, please do press the like button. Circulate this to your friends through your WhatsApp channel and other channel actually. And if you're not subscribed to the channel, feel free to subscribe and remain engaged with the channel. Thank you so much for your time. Have a great day. Jai Hind, Jai Bharat.